Welcome to VID Nation. The year 2020 is coming to an end, and this year is probably one of the craziest years that we have seen in our lifetime. On the one end, we have seen confusion, we have seen panic, we have seen losses to human life and business. But on the other end, we have seen some amazing investment opportunities in the stock market. And I have made a couple of videos regarding my experience of investing in the coronavirus crisis. And this particular video is the last of that series. If you have not watched the previous videos, I will highly recommend you to do that. They are all linked in the description below. And in the last video that I made, I shared 5 experiences that I had of investing in coronavirus crisis, and this particular video will share the remaining 5. So I hope that all the practical experience that I'm going to share with you, the real life experience that I'm going to share with you, is going to be helpful to you, and hopefully you will be able to profit from that. Okay, now let's take a look at the portfolio. And I believe this has been a while I have shared my portfolio with you guys. So let's just jump right in. So you can see here that the portfolio, the stocks are doing fine. The market has been very charitable to my portfolio, and the gains are pretty significant. And this is basically something which has happened within this year itself. And in fact, most of the holdings are from March onwards. So, and some of them are quantity 1. It means that I have already booked profit in these stocks. So some of them really made a lot of money. So it almost become 3 times, right? So that makes a lot more sense to just book the profit. And some of them I'm still holding. A lot of them, in fact, I'm still holding right now. So Bajaj Finance, for example, I'm holding, and I have a significant exposure there. And you can see here, I mean, the portfolio is doing extremely well. I cannot take credit for this portfolio to do this well. It's basically the market which is doing, the whole thing. So you can take a look at it by pausing the video if you want to, but we'll just keep scrolling down. And this is not just stocks, by the way. These are also mutual funds through ETFs, exchange traded funds. So I have junior Bs right here, junior Bs, and I also have Nifty Bs. So there you go. And so this is basically how the portfolio is looking like at the end of the year right now. And you can see here the market has been extremely charitable. I'm sitting on a profit of more than 56%. And this is the profit after I have booked profit on many stocks such as Reliance, Aurobindo Pharma, Escorts, and a lot of other companies where I was sitting on some significant profits. I booked my profit, and this is basically after I have booked the profit. This is what where I am right now. Now let me quickly go and talk about my overall portfolio. So here it is right now. The current value is 1.62, and equity holding is this much. Mutual funds are this much, and I probably should go to Coin to discuss my mutual fund holdings. So mutual funds, they are doing fine, right? So as you can see, some of them 35% profit here, 30%, 49%, 38%, 40%, almost 64. So they're doing fine, but I believe that I have done better by investing myself. Right, so when I look at my performance here, this is based on individual stock selection. I'm sitting on 56% profit, whereas here I can only see 43.9, which I guess is the characteristic of a mutual fund. So you cannot really, expect more than that. So I'm satisfied. There is nothing wrong with 43% also within 1 year. So this is pretty significant. And apart from that, this is another portfolio which I believe I have shared in the past. So here it's a smaller portfolio. Here again I'm sitting on some profits here. So clearly, guys, between this and this and this and this, what I really want to communicate here is that the concepts that are applicable in the stock market, if you learn the concepts the right way, making money just becomes a simple byproduct of that. It's not really too much about rocket science. It's not too much about finding some very extremely sophisticated strategies. Strategies are very simple. It's just a matter of application of those strategies at the right time being prepared for those opportunities when they arrive in front of us. Now, the first thing I want to talk about is when should we be afraid? And this is very interesting because when the market was correcting back in March, April, I was talking to a lot of people and I was giving them advice that, this is a good time for entering into the market. And one of the questions which was asked a lot by a lot of people was that what if the market goes down another 10 or 20% from here, right? A lot of people, when I was telling them this is a good opportunity, a lot of good stocks are trading at very cheap valuation, you should be thinking of investing. This is one question that they used to ask me. And I had absolutely no answer whatsoever to tell them, right? I don't know whether the market will go down 10% or 20% from there. So I told them that I don't know. And because of that, a lot of people refrained from investing at that time, right? And the rest is history. Of course, the market has rallied up so significantly that most of them are left out. But the more interesting part today is that people are asking, can I invest in the market right now? When the market is sitting at almost 14,000 level, the people are asking me, can I invest in the market? Which stock should I be? People are not even asking, can I invest? They are asking, which stocks should I be investing in the market right now? And the one question which they were asking me back in March and April, that will the market go down 10% or 20% from here? That question is not being asked at all. And isn't it surprising? You guys tell me that if this is the market right now, and what is the logical point of asking that question? What is the logical point in time of asking this question? When the market has already corrected some 40% from the top, is that the point where we should be asking whether the market will keep going down? Or after the market has rallied almost 60% from the bottoms, shouldn't that question be asked right now? Shouldn't people be saying that, this market has gone up a lot. Can the market go down 10% or 20% from that level? But the interesting thing is that almost majority of the people were asking questions here, but almost nobody seems to be minding this market being so overbought. And what they are considering right now is that, can I buy into the market right now, right? So all this fear of missing out and this greed basically stops us from thinking logically. And that is one of the things that I want to share with you guys, is that when should you be afraid? Should you be afraid when the markets are crashing, or should you be afraid when the markets are in a euphoric phase? The markets are hitting their all-time highs. When should you be afraid? A smart investor is not afraid when the markets are falling, right? A smart investor, in fact, becomes happy, opens his or her wallet or purse to buy. And when the market starts to go into a parabolic phase or a euphoric phase, that is where the smart investor starts to worry, right? So a smart investor is worrying here and is happy here, right? Whereas an average investor who is new to the market, who is not really appreciating the basic dynamics of the market, they are happy here. They are happy to buy here, whereas they are worried here, right? Very simple learning, guys. This is not really a rocket science. This is a very simple learning. And it basically came to me because everybody was asking me here, can the market go down 10 or 20%? And I said, I didn't have any idea. And the market just kept on going from there. But nobody, right? Nobody seems to be worried about the market correcting right now. So you decide, when should you worry? Should you worry when the markets have run up a lot, or should you worry when the markets have corrected a lot? The next learning is the price of big profits is volatility. Now this is something which I want to make a separate video about as well, but I will just touch very briefly about this. So what happens is, whenever you invest in any stock or any mutual fund, the journey of that stock to a certain level will not be in a straight line. The stock will go up, it will come down, it will go up, it will come down, it will go up, it will come down. Now, sometimes they will go up and then they will just keep coming down and down. Sometimes they just will consolidate and then again go back up, right? So the journey is non-linear. Sometimes the stocks will go up, they will come down, consolidate, they will go up again. Sometimes some of the stocks where there are some real issues, they just will go down. But the learning that I want to share with you is that if you want to make big money in this market, you cannot be scared of this correction which happens in the stock. So a lot of these stocks which went up, let's say 40% in the beginning, from 40% level, they came down to almost, let's say 20% level. So if I have already seen a profit of 40% and I say that, you know what, at least I'm getting 20%, so let me book my profit in 20% and come out. So if I will get scared, I will never have the opportunity to see this kind of profits. If you want to see 100% profit, if you want to see 103, 93, 95, right? So these kind of big profits, you need to have the stomach to sit on those stocks, sit through the volatility, let the volatility pass. And when the market will regain the momentum, when the stock will regain the momentum, the stock will keep going higher and higher, provided of course that the stock that you have invested in is a fundamentally strong company. So that's a very important learning, that the price of big gains, the price that you are paying, it's not a real price, it's a psychological price. The price that you pay for big gains is volatility. So you need to have the stomach to sit through the volatility if you really want to see big profits. Now, this is another learning which I want to share with you, is that a lot of people ask that how much should I invest in mutual funds and how much should I invest in individual stocks? And my answer to them, that question, is that what helps you sleep at night, right? What in which situation will you sleep better at night? So right now, as you can see with my portfolio, a majority of my portfolio is concentrated with stocks, and a small portion of that is dedicated towards mutual funds. So my allocation is more towards stocks than mutual funds. But this is the portfolio of a person who is more risk savvy, who is willing to take risk, because the horizon for the goals for which this portfolio has been planned is a longer horizon. I'm willing to sit for 5 years, 10 years, 15 years for this portfolio to work out for me, right? Whereas people who have short-term goals, let's say another next 2-3 years, they will not have that kind of a luxury to sit on their portfolio for a very long time. So when you're deciding that how much money should you be allocating to stocks versus mutual funds, you have to see what will help you sleep better at night. If your goals, for example, your kids' education is coming in the next year, for example, right? You cannot have a lot of allocation towards individual stocks, because just like what we have seen, this profit can vanish in a matter of few months, in fact, a few days, in fact, for certain stocks, right? So you have to take that call based on your obligations. So if you have obligations which are coming in, the goals that you have planned for, if those goals are coming in the next, let's say 1 year, 2 years, you should be allocating more towards mutual funds. And in fact, within the 1-2 years, in fact, you should be thinking of taking the money out of the market, not adding any money in the market. So I hope this answers the main question about the allocation between stocks and mutual funds. So my next advice is, don't think like a trader. Now, why am I saying this? Now, being a trader is nothing, there is nothing wrong with being a trader. In fact, I myself am a trader. Wrong about trading itself. So I trade for a living, so I cannot say anything wrong about trading, right? So this is what basically I do day in and day out. So trading, there is nothing wrong with trading. There is nothing wrong if you want to make money through trading. But the problem is when you are using the mindset that you have for trading in investing. See, one of the main differences that I have seen between trading and investing is that in trading you get several chances. Right. So today, for example, let's say I'm sitting on 17,000 rupees of profit. Tomorrow, I may take a loss of 7,000, 8,000 rupees. Right. So every day, every other day, the market keeps presenting new and new opportunities in trading. And it is about identifying those patterns in the market, short-term patterns in the market, and taking advantage of that. Whereas in investing, how many times can you build your portfolio? Right? So this is a portfolio which you build, right? So when you buy these stocks, how many times can you buy a stock? Can you sell a stock? Can you buy a stock? Can you sell a stock? You cannot keep churning your portfolio at the pace at which you can churn in trading. Now what happens is a lot of people, they come to investing with the mindset of trading. And so what they basically want is that, okay, when the stock will go up, 100%, then I will come out. When it will come down to 7, let's say 20, 30% down from those highs, then I will buy again. That is easier said than done. In real life, it is extremely hard to time your investments based on these highs and lows. I will give you a quick example here. So this is the example of Vedanta. So Vedanta, right now, as you can see, I'm sitting on 150% profit on Vedanta. But Vedanta, the journey of Vedanta has not been very clean. Right? So if you take a look at the chart of Vedanta, I bought it somewhere around here. My average price was, let me just do this. My average price of Vedanta was 64 rupees. So if I take a look at the chart, so I will go back here. So 64 rupees, basically I bought Vedanta extremely cheap, right? So I bought it somewhere around here, literally here, I mean almost at the bottom. This is how precise was the entry for Vedanta, average entry for Vedanta. But if you take a look at the chart of Vedanta, Vedanta moved up very well, very well. And from 63 rupees, it went all the way to 140 rupees, right? But then from 140 rupees, it came down to somewhere around 90 rupees, right? So there was because of the delisting issue, some of you might remember. But as an investor, if you get shaken out of your long-term investment just because some technical factor has happened, then people will get scared. They think that, okay, I was sitting on a profit of 100%, 120%. Now my profit has gone down by 30, 40, 50%, right? So they think like traders. Whereas for a long-term investor, if I believe in Vedanta, if I believe in this company, then it just becomes a matter of time. So all these are minor fluctuations which I have to be ready to ignore. And eventually what happened with Vedanta, it basically rallied back again from 90 rupees, and it has not only rallied back, it has also gone above the level from which it corrected earlier. So as an investor, you cannot be worried too much about the short-term fluctuations. You cannot think like a trader and analyze in the hindsight that you should have booked profit here, exited here, re-entered here, and then again exited here. That is the mindset of a trader, right? And there is nothing wrong in being a trader, provided that you are following the rules of trading. You cannot be a hybrid investor and trader. That doesn't work in real life. When you are trading, you have to think like a trader. And when you are investing, you have to invest like an investor. Now, last but not the least, guys, this is one thing which I have seen is that every time there is a new bull market run, the market leaders change. Now, let me explain what I mean by that. So when I say market leaders, I'm talking about the industry which is leading the market. So let's take a look at Nifty IT, right? So Nifty IT, and this is a daily chart. So take a look at how Nifty IT, how beautifully Nifty IT has moved from the lows of March and April, right? It has just an amazing run. Same is the case with Nifty Pharma. So Nifty Pharma has done something similar. So if you look at the daily chart of Nifty Pharma, it has moved up significantly. Whereas if you see Nifty Bank, Nifty Bank has not even come back to the level from which it corrected. Of course, now it is almost there, but it's still not there from the level from which it corrected. It's still from 32,500 is still down. So what happens is every time there is a bull market, the leaders of that bull market change. And it is our job to identify what this new leadership, from where this new leadership will come. So in the last bull market of 2016 and 2017, NBFCs, banks, they were the ones who were shining. They were the ones who were giving you the maximum returns. Whereas in this run of the bull market, and it is the bull market, don't get me wrong, this is the bull market. This is led by pharma and IT. So if you are still sticking to the past, if you're always looking backwards at who led the market last time, you will miss the bus. right? So you always have to think that, okay, if this is a new bull market, I have to find who are the leaders of this bull market. So guys, this is basically what I wanted to share with you guys, and the idea and the intention of showing and sharing with all you guys my portfolio is not to show off. It's not to tell that look how much money I have made. It is basically to show that knowledge is power in this market. If you have the right knowledge, if you know the basic strategies, if you have the mental discipline, if you know how to manage your risk, then making money becomes very easy. It is simply a byproduct, right? So I hope that whatever you saw in this video, first of all, you will not take it as a recommendation to buy or sell. You will use your own judgment. And secondly, you will take some inspiration from this, right? So if I can make money, then I don't see a reason why you cannot, right? So you can in fact make more money than I can. So with that, I wish you all the best for the coming year. And I hope that 2021 happens to be one of the best years for all of us in terms of prosperity, in terms of health, and in terms of our well-being of ourselves and our family.